the trigger and actually trade your plan. You know, it's kind of like the means to the end. What is it that's going to drive that decision? Now, obviously, when we talk about fundamentals, we know that fundamentals will dictate price. And then it's technical analysis. You know, that's the duty of the technical analyst to track that price movement on a chart. But when you keep in mind that the trading really is about investor sentiment, it's the people that make prices, and the people can change their opinions and their views very quickly, as we have seen in this risk-on, risk-off type of environment, depending upon which way they're in at this on a particular day. You know, it's kind of like not necessarily what the actual supply-demand number is, but what do people think about that in terms of the value that they will place upon the price that are available. So, you know, it's the trading crowd, the social mood. Sometimes that can do irrational things, and sometimes when they do such irrational things and go to extremes, it is the type of movement on which a trader who kind of keeps their head about him can capitalize if he knows, you know, kind of where the situation is on the charts. So we need to look at some of the probabilities. We need to have some kind of a basis for making our trading decisions, and the program that I use, or the charts that I use, are provided by Vantage Point Intermarket Analysis software. It's very difficult to get the information from a fundamental standpoint, you know, before everyone else has that information. That even if I had it, sometimes it's very difficult to interpret how are other traders going to react to it. So from a fundamental standpoint, yes, ultimately that will dictate what the price does, but is it the type of thing on which I can base a trading decision? For the most part, probably not. I mean, I can have a sense that something is really cheap or something is really dear, but you know, then it still doesn't give me a spot to be able to trade. So I use my Vantage Point Intermarket Analysis software, which of course, as its name emphasizes, the intermarket analysis aspect, where it determines the 25 markets that have the most impact on a target market, and then provides a set of intermarket data that is used to provide some indicators that try to that turn the lagging indicators, such as a moving average or something, into more of a leading indicator to try to give clues early. I need to emphasize I'm not, you know, a salesman for Vantage Point, and we'll have a number at the end where you can talk to them about Vantage Point if that's your interest. But just to say that this is a tool that I have found useful for trading, and that you know, when I'm using something on which I have some kind of basis for making a trading decision, for me that gives me some you know, discipline. It gives me some confidence to trade, and you know, I need that tool. I need something to do that. Well, now when we talk about working, you know, on some kind of a means to accomplish our plan, we're going to use the E-mini as an example. It was suggested a webinar or two ago that you know, talk more about the E-mini, because that's probably the most popularly traded contract. Everybody's kind of familiar with what's going on with the stock market. You know, sometimes some of the other markets may be you know, a little out of the realm of possibility. When we start talking even about individual stocks or those kinds of things, you know, those may not apply to many traders. But the E-mini kind of is a common ground for a lot of different types of traders. And when I look at the E-mini, and I try to go, again, as I normally would do, to go to the long-term aspect first and get a kind of the big picture analysis of what I might expect the market to do over a given period of time. And I know that 2011 has not been an easy time to trade. I know that when you look at what's going on and try to detect trends there, you can see that there are you know, kind of some ups and some downs, and some short and some long, but not an easy type of a situation to trade. If you look here at the market we had here back, that's the end of the of 2010, December, and you can see that when you go to today's market, we aren't there yet. We're down now roughly 4%. We were up, and you know, then we dropped back down, and you know, still trying to struggle to make 2011 a positive year. So out of that, you know, there are some possibilities that we can come up with for some potential trades, and we have to be fairly nimble if we want to do that. When I look at the big picture here, I like to look at some of these, what I would call some battle zones. You know, where is the action going to take place? At what point can I expect something to happen, you know, in the struggle between bulls and bears, and trying to come up with a future for prices? And we'll look, right here, this little red box here, you can see, well, there's a battle zone shaping up right there with the highs and the lows. Breaks above it, and it will tend to go back and forth. And if it goes below, it will tend to go back and forth before it makes a decision about which way to go. Lots of little spots in here. Some are small and some are relatively big. When you get up here to a situation like this, you can see that in this situation right here, that those lows that we had a few months ago, that's kind of a battle zone when you get to what's going on, what happened in the months of June, July, and then finally it sank through that point in August, where the battle is going to take place in that zone. That's the kind of thing that you need to be aware of as to where those zones exist in the bigger picture. In the case of the markets that we have right now, we can look at this area right in here as a potential battle zone. We're up towards the top of the general sideways range. If the market drops back from that, then you have this potential battle zone that occurs down here at the bottom end of this range. So at this point, you can see we can go either way with the battle zone, and the battle we're now fighting is going to be between the bulls and bears at the upper end of the recent range. Not that far from what the low of the previous range was, where you had support previously, now kind of becomes resistance. But when you get into these battle zones, then you can look at your chart more carefully, kind of analyze it, and find out what should you do based upon the big picture. One other thing to note here, and this is kind of an aside here and not really have anything, but if you look at sometimes at the first of the month, we talked about there was January the 1st right there. If you go through the chart, just kind of look at the first of the month. There we have, there's May, there's June, of course, about August the 1st. The first of the month kind of, and again, here we'll go right in here into October. This was the first trading day of the month right in here. That right after the first of the month, things start to happen, it seems like anyway. Now, this is only an observation that I haven't made any big study of this or anything like that, but what the markets do to even up or get into position or out of positions at the start of the month may be, a good thing to kind of study if somebody has the time and energy to do this, to study exactly what that first of the month implication is for the way the markets are going to go. Now, we have lots of time here. We have the big picture here, but we're going to narrow it down to the current time frame so that we can take a look at what we're going to add to the chart, how the indicators are going to be able to help us to trade. Now, as I mentioned, this has been a tough time to trade for anybody. We'll just put our kind of our top side border on here for what we have here where we're at in this battle zone, and we'll put our bottom side border on here. And again, these are just kind of approximations, and we get little jabs and things like this back and forth. So this isn't rigid, but they kind of tend to be sort of lines in the sand where the markers are, where things could potentially happen. And so to add to that, we need some indicators to help us determine what it is that we might be able to do. And we're going to add several vantage point indicators, talk about them a little bit, and then we're going to apply them to the E-minis, the current situation. The indicators that we have on the chart right now, we've added things that will mostly reflect where we expect the trend, the sense of direction to go, and kind of what's ahead. First of all, we have this blue line that you see, that's a predicted exponential moving average, a medium-term exponential moving average, and that is the blue line, and it compares with a 10-day simple moving average of the close, the black line there. You can see that during a period of time that we had right in here, we had a little choppiness back and forth here. Tough time to trade, and anybody who did very well there would have to be very nimble, very adept, and probably out of the market almost as much as in to be successful, because